The dollar collapses overnight. You wake up. Your bank app still shows the same number, but it lies to you because what those numbers can buy has just been cut in half. Groceries jump 30%, gas spikes by lunch, your landlord adjusts to market conditions, your employer freezes hiring, investors panic, politicians hold emergency meetings, and you're holding paper that just lost trust. When a currency collapses, it doesn't politely decline, it breaks confidence. And confidence is what makes money work. Without it, your savings become a melting ice cube. Your debt becomes either your greatest enemy or your secret weapon. Every asset reprices. Some die quietly, others explode in value overnight. If the dollar collapses, certain things will skyrocket. And if you understand why, you won't just survive it, you'll reposition before the chaos finishes sorting winners from victims. First, understand the threat. A collapsing dollar means rapid inflation or hyperinflation. That means more dollars chasing the same goods. Prices rise not because items are worth more, but because the currency is worth less. The math is brutal. If inflation hits 25% annually, your $100,000 in savings has the purchasing power of $75,000 in a year. If it spirals beyond that, the loss accelerates. Compounding works in reverse. Now let's talk about what explodes upward. Hard assets move first. Real estate doesn't care about political speeches. Shelter is survival. If the dollar weakens dramatically, tangible property often reprices higher because construction materials cost more, land becomes a hedge, and people flee cash into physical things. But here's the twist. Not all real estate wins. Luxury condos tied to speculation can collapse if credit freezes. Affordable housing and productive land, farmland, multifamily units, tend to hold or rise because they generate utility and income. The threat is leverage. If you're overextended with adjustable rate debt, rising interest rates can crush you. But if you locked in low fixed rate debt before inflation spikes, your mortgage payment becomes cheaper in real terms over time. Inflation erodes what you owe. The bank gets paid back in weaker dollars. That's how you turn debt into a weapon instead of a trap. Next comes gold and silver, not because they are magical, because they are scarce and globally recognized. When trust in paper dies, humans default to tangible stores of value. Gold doesn't produce cash flow, it just sits there. But in monetary chaos, just sitting there while everything else burns becomes attractive. The psychology drives the spike. The solution isn't to bet everything on metal, it's to allocate strategically as insurance, not hope. Then comes energy. Oil, natural gas, electricity production. These become critical. A collapsing dollar often means import costs surge. Energy prices spike. Companies controlling energy infrastructure reprice quickly because everything runs on energy. If you own productive energy assets or shares in strong producers with low debt, you hold something the world cannot function without. The threat is governments may regulate profits or impose windfall taxes. Political risk becomes real. Diversification becomes survival. Now let's talk about something most people miss: foreign currencies and foreign assets. When one currency collapses, others strengthen by comparison. If you hold assets denominated in stronger currencies, you create a hedge. This is simple math. If the dollar falls 40% against another currency, your foreign-denominated investment effectively rises 40% in dollar terms. The risk is global contagion. Sometimes crises spread. So you choose countries with stronger fiscal discipline and stable trade positions. This isn't speculation, it's currency risk management. Next, productive skills. When the dollar collapses, wages lag behind prices. Employers struggle. Layoffs increase. But certain skills become more valuable overnight. Repair skills, medical skills, food production, logistics, security, digital services tied to global markets. If you can produce something essential or export your skill internationally online, your income detaches from the local currency crisis. That's leverage. The asset is you. Most people ignore this because it sounds boring. They'd rather chase the next hot stock. But when systems crack, cash flow from adaptable skills skyrockets in relative value. The threat is complacency. The solution is pre-crisis upskilling. Learn something monetizable before you need it. Then there's commodities, food, water rights, agricultural inputs. When currency collapses, supply chains strain. The price of wheat, rice, fertilizer, these spike because they are globally traded and dollar-denominated. If the dollar weakens severely, commodity prices often rise in nominal terms. Owning exposure to essential commodities can act as a hedge, but speculation without understanding cycles can wipe you out. Commodities are volatile. Use position sizing. Risk management is not optional. Now let's talk about businesses. Not all businesses survive currency collapse. Many suffocate under rising input costs and falling consumer purchasing power. But businesses with pricing power, companies that can raise prices without losing customers, skyrocket in relative value. Think essential goods, discount retailers, infrastructure providers, repair services. If you own or invest in businesses that solve urgent problems, inflation becomes pass-through instead of a death sentence. The internal threat here is ego. People cling to dying business models because they're emotionally attached. Survival demands adaptation. Cut costs fast, preserve cash, raise prices strategically, protect margins. Cash itself becomes complicated. In early crisis stages, cash can spike in value because liquidity disappears and everyone scrambles for it. But if collapse accelerates into high inflation, long-term cash holdings become toxic. The strategy shifts. You hold enough liquidity for flexibility, but move excess into productive or hard assets. Timing matters. Panic decisions destroy wealth. Now let's address debt again. If you owe fixed-rate debt during high inflation, your real burden shrinks. If you hold variable-rate debt, you can drown. Credit card interest rates can skyrocket. Adjustable loans reprice upward. This is where families fall into permanent damage. Minimum payments rise while income lags. The solution is ruthless. Pay off high-interest variable debt before crisis hits. Refinance to fixed rates when possible. Reduce exposure before the storm. Because once the dollar collapses, lenders tighten standards, credit freezes. Access to capital becomes more valuable than capital itself. That's another asset that skyrockets: liquidity access. If you have strong credit, established business lines, or relationships with lenders before collapse, your ability to borrow becomes rare. In crises, banks stop lending to average applicants. They lend to the strong. So you build strength early. Clean credit, low utilization, documented income streams. That access can let you buy distressed assets while others are forced sellers. Distressed assets are next. When panic spreads, people sell good assets at bad prices to cover short-term survival. If you have liquidity during collapse, you can acquire quality real estate, businesses, or equities at discounts. This is how generational wealth is built, not during euphoria, during fear. But only if you prepared before. Now let's talk about something uncomfortable: community. In currency crises, informal economies rise. Barter networks, local trade systems, trusted relationships. If supply chains falter and formal systems wobble, local trust networks become economic assets. The lone wolf investor fantasy dies quickly in systemic breakdown. The prepared, connected individual thrives. Relationships become leverage. There's also digital infrastructure. If capital controls appear, limits on withdrawals, international transfers, digital assets that allow mobility of capital can spike in demand. But volatility is extreme. Regulation risk is real. You don't gamble blindly. You allocate with awareness that governments respond aggressively when monetary power is threatened. Now, zoom out. The real threat isn't just the dollar collapsing, it's you freezing. Fear leads to impulsive selling, hoarding, chasing rumors, over-leveraging in desperation, buying whatever social media screams is safe. That behavior destroys more wealth than inflation ever could. Discipline is the ultimate appreciating asset. You create a plan before crisis hits. You diversify across productive assets, hard assets, global exposure, and personal skills. You reduce toxic debt. You secure liquidity. You maintain optionality. Because when currency collapses, optionality skyrockets in value. The ability to move, to pivot, to deploy capital, to change income sources, to relocate if necessary, to shift strategies quickly. Most people are trapped by lifestyle inflation, big house, car payments, fixed expenses that demand stability. When stability disappears, they collapse financially, even if they earn decent incomes. So you simplify before you're forced to. Lower fixed expenses, increase savings rate, multiple income streams, not because collapse is guaranteed tomorrow, but because fragility is expensive.
Let me be blunt. If the dollar collapses and you're sitting in cash, drowning in variable debt, dependent on one employer and emotionally reactive, you will lose years, maybe decades of financial progress. You'll work harder for less. You'll watch assets rise beyond your reach. But if you hold productive real estate with fixed debt, diversified global exposure, essential commodities, adaptable skills, strong credit access, and disciplined cash management, you won't just survive repricing, you'll reposition upward while others panic. Currency collapse is not the end of wealth, it's the transfer of wealth, from the unprepared to the prepared, from the rigid to the adaptable, from the emotional to the disciplined. Your job is not to predict the exact day. Your job is to reduce fragility and increase leverage before the system tests you. Because if the dollar collapses overnight, the question won't be, why did this happen? It will be, did you prepare when it was still quiet? And that answer will determine whether you're scrambling for survival or quietly acquiring assets while the world relearns what money is really worth.